This is the only market structure video you will ever need in order to succeed in the market. Even if you're trading stocks, cryptos, Forex, metals, or any market, this is the only video you will ever need in order to understand in depth about market structure analysis. I'm not going to talk about the basics of uptrend, downtrend, or the ranging market. I'm going to give you in-depth understanding so that from tomorrow onwards, by watching this particular video, you will be able to implement that and make profit from the market. So this is one of the major topic in technical analysis, and we are going to talk in depth about market structure analysis, and I'm going to say that this is really, really important. So my name is Arshad and welcome to AI Trading Community. So as a trader, you should understand that market structure, market moves in ranges, market moves in whenever there is an uptrend, whenever there is a downtrend, there are different characteristics which you need to focus. So the first thing which you need to do is you need to take a book and a paper or a plain sheet of paper where you need to note down every information which I'm going to talk to you. I'm going to give you the in-depth knowledge so that you need to take every information and put that into the paper, put that into your mind, and you need to implement that in your trading career as well. So I'm going to give you that information, and I hope you will take proper notes, you will digest that, you will have proper clarity about what I'm talking about. So multi-time frame market structure analysis. That is the in-depth topic which I'm going to talk. So for this example, I'm going to talk from the basics. And for this example, I'm going to take the higher time frame as the 4-hour and the lower time frame as the 15-minute. Okay. So let's look at how a market structure analysis work during the uptrend. Okay. So the first thing which we are going to focus as a trader is the uptrend. I'm going to talk about an ideal uptrend, how it looks. So the first thing which I told is we are going to look at the high time frame as the 4 hours and the lower time frame as the 15-minute. Okay. So when you're looking at the high time frame, this is the 4-hour. During an uptrend, this is the ideal structure of an uptrend. The market will create an up move. Then it will create a pullback or a retracement. Then it can tap to a demand zone. Then it will go up, breaking the previous high, which you can call it as a break of structure as well. So whenever the market is going up, it doesn't go in a straight line, right? The market always moves in waves. And whenever this waves is formed, whenever there is an uptrend, the market creates an uptrend, up move, then it creates a pullback and then it goes up. So if you look at the 4-hour, this is just what's happening in the 4-hour. But if you look at the 15-minute of that same move by marking the lows and highs, you can see that if you look at the 15-minute, the market is going up, going down, going up, going down, creating this, high, higher lows and high. And during this retracement, during this retracement, if you look at the 15-minute, what you're going to say here is there is a change of character. What is a change of character? A change of character is when an uptrend changes to a downtrend or downtrend changes to an uptrend. So if you see here in the 15-minute, everything is going smooth, creating high highs, right? Higher high, higher high, higher high, higher lows, and higher lows. But if you look at the 15-minute and if you zoom in, you were expecting a pullback, right? But if you look at the 15-minute, you can see that there is a break of structure. Again, the market is going up, creating lower lows, creating a high, creating lower low, again breaking this particular low. The first thing which you need to understand is by establishing your high time frame, by understanding that whether your high time frame is going up, you understood that this is just a pullback. This move is just a pullback. And if you look at the 15-minute, this is how it looks like. It creates a change of character, right? It creates a change of character. There is a BOS where is break of structure. The market structure shift is completely happening. But if you look at that same chart on the 4-hour, it is just a pullback or a complex retracement, right? So this is how things work. So when the market is going up, you are seeing that there is a proper up move. This is the impulse move, right? Then we have a pullback, a complex pullback or retracement. But if you look at that same retracement in the 15-minute, you can see that there is a change of character. This is how it happens. And I'm going to give you live examples as well. Okay. So after that, you can see that this previous high, this was broken by the 15-minute. Again, here you can see that this previous high was broken. So during a great rally on the 4 hour, you can see multiple uptrends, multiple downtrends, and multiple uptrends again. Multiple break of structure and change of character in the lower time frame. Why are we looking at the lower time frame? We are looking at the lower time frame to get the best entry, to get the refined entry, to reduce our risk and capture higher risk reward trades. And I'm going to give you more knowledge through this channel. I'm going to give you more idea about how you can build daily bias. There are in order to succeed in trading, it is not just market structure, it is not just risk management or psychology. It is a combination of everything. You need to understand technical analysis in depth about different aspect of technical analysis. Then you need to focus on risk management, different elements of risk management. Then you need to focus on proper psychology and how to build a proper psychology. By combining this everything, you will be able to succeed in the market, right? So it is not just, it is just not the strategy, it is not just the psychology, or it is not just the risk management. It is the combination of everything. That's the reason 95% of people fail in the market. So in order for you to succeed, I'm going to give you the best information, the deep information. If you're ready to learn, I'm going to give you that information, and you can take that information, collect that information, and build a strategy around it. From this video, I'm going to give you proper ideas about how you can build a proper strategy, a risk management plan, and a trading psychology with for a beginner, right? I'm going to help you with that. And by watching this video till the end, you will have a complete idea about that as well. So this is how an uptrend looks like, and this is how a downtrend looks like. During a downtrend, we have an impulse move, right? We have an impulse. Wait a second. We have an impulse move. Then we have a complex pullback or a retracement, tapped into a supply zone. Then the market came back down. So we have the lower low, again lower low, lower low. That's how it's happening. Lower high, lower high, lower high. From this particular point, the market start going up, creating a change of character. Again, the market is going down, breaking the previous low, right? Previous low here, the same low, right? The previous low is broken again, and the market is going down. So this is how it looks like. So this is the 4 hour, this is the 15-minute. So in one of my video where I was focusing on the one thing which has the biggest impact in your trading, you can watch that video as well. It is in my YouTube library, right? So in that video, I was saying that in order for you to succeed, you need to have a proper analysis with proper backtesting data, and you need to stick to a particular strategy for a period of time in order to prove to you whether it works or not. So if you are following that, I would say that you need to also focus on a higher time frame. You should choose a particular high time frame. Let's say in this case, it can be the 4 hour, and this can be the 15-minute. So you need to choose a high time frame and a lower time frame. And I would say that every week at the weekend, you should look at the high time frame, like the weekly, the monthly, the daily, the 4 hour, 1 hour, every time frame. Let's say you selected the 4 hour. So you need to understand the bias of that week, right? With the help of your high time frame analysis. Let's say you looked at the weekly time frame. It is going uptrend. It is tapped into a fair value gap. It is going up. Everything is going all right. And when you came back to the 4 hour, you should have that feeling, right? You saw that the same up move is happening in the 4 hour as well. So I'm going to give you some extra tip. So for the week, what you should do is you should keep the 4 hour. Maybe if you have chosen the higher time frame, the 4 hour as your higher time frame, the next thing which you need to do is you need to focus on that 4 hour in order to create your bias, which means that if the market is going up and in the 4 hour the market is going up, you should look for buy side entries on the 15-minute. If the market is going up on the 4 hour, you should look for buy side entries on the 15-minute. This is your decision candle. This is your decision time frame, which help you to create the daily bias. This is your execution time frame. 15-minute is your execution time frame. So you look at your 4 hour in order to understand what is the market trying to tell you, whether it is uptrend, ranging, or downtrend. By understanding that, let's say the market is going up. So you fix that your daily bias is uptrend. Then you go to the 15-minute in order to get entries, in order to understand proper execution, in order to refine your entry, you go to the 15-minute. You don't just randomly look at 1 hour, 4 hour, 1 day, 1 week, every single day. You don't need to do that. All you need to do is look at a higher time frame, select in a higher time frame. Let's say it's 4 hour, let's say it's 1 hour. By selecting that higher time frame, use that higher time frame to create a bias, to create or understand whether the market is going uptrend, downtrend, or a ranging, it is in a ranging market. Then come back to the 15-minute to execute that trades. Let's say you looked at the market. Let's say you're trading gold, right? XAUUSD. And by looking at the market, you understood that there is a high chance that the market is going up based on the 4-hour charts, which means that you are expecting an upward move on the 4-hour or the higher time frame which you selected. By selecting that, the next thing which you need to do is go to the 15-minute. Look for refined entries. Look for entries where there is a discount. So this is a discount levels. These are discounted levels. Look for discounted entries in the 15-minute or your lower time frame. The 15-minute is your execution time frame, or the 15-minute is the time frame where you execute your trades, and you go to the 15-minute in order to find that refined entry. You look for the refined entry. You can go wait for the market structure to happen. Look for good demand zones, and you know that in the higher time frame it is going up, so you are going to expect a higher move, right? So you can select your daily bias on the 4-hour, 1 hour. After you selected that bias, then you go to the 15-minute in order to execute your trades. In order to refine your trades, you go to the 15-minute. So if you are expecting an upward move, you are not going to trade the downside move, right? If you are expecting an upside move in the XAUUSD, you are not going to execute a downside trade. You are not going to execute trades. You are not going to execute trades here. If I'm someone who has the capability to advise you, I would say that if you are expecting an upward move in your high time frame, which can be the 4-hour, you should avoid taking trades here. Instead, you should focus on taking trades towards the upside. You should look for refined entries. You should look for break of structure in the lower time frame, and then you need to execute the trades. And I'm going to look at the live examples, and I'm going to give you the proper understanding about how you can execute trades, how you can look at the high time frame and understand and establish a daily bias. So now we are going to look at the live charts and understand how we can use the market structure analysis in depth. So you are not going to take trades randomly, but you are going to you are someone who is educated by AI trading community, and I'm going to give you an understanding about how you can execute your trades by understanding the daily bias or understanding the high time frame. So let's say we have selected the high time frame, 4 hours as our high time frame. So if you have selected the 4 hours hour as your high time frame, this can be the low, high. Again, the market came back down, protecting this low. The market went up, protecting this low right here. Again, the market went up, protecting this particular low. Again, the market went up, protecting this particular low. So this is what the market is happening. It is creating higher high, higher high, higher high, higher high. So this is a clear example. We have a clear example of proper upward move, right? We have proper upward move. This is higher low, and higher low. So what we are going to do is we understood that in order for the market to go down, if you have selected the higher time frame as the 4-hour, in order for the market to go down from this particular point, it should at least break this particular low. If the market is going up, if the market need to go up from this, go down from this particular low, from this particular area, the market should break this particular low, also break this particular low. So if the market is not breaking this particular low, it is evident that the market is likely to go up from this particular area. The market is constantly going up, creating high highs. So based on my daily bias, there are several factors which you need to use in order to establish your daily bias. But still, by looking at this charts, if you are establishing that your daily bias is upward, what you're going to do is you are going to look at the lower time frame and execute your trades based on that as well. So this is the 15-minute chart. This is the high which we marked here. This is the low. This is the first leg, right? From here to here. This is the first leg. So this is the first leg from this particular point. From this particular point to this particular low, this is just the first leg. So this is the pullback or retracement. So look at the 15-minute. This is how it looks, right? This is how it looks. The market created breaking the lows multiple times. This low, the market low was broken. Again, the low was broken. Again, this particular low was broken. Again, the low was broken. Again, the market broke this low. Again, after you can see that this high was broken by the market, and then the market tapped back here, right? The market tapped back here, selecting this particular demand zone or the order block, and the market taking liquidity, and the market started going up. Again, the market came back down, creating this touching this fair value gap. The market went up. So you need to understand that this whole move, right? This whole move is more powerful than the pullback, right? So if you are someone who is a beginner, if you are someone who is having trouble in order to establish trades, in order to execute trades, and not able to be profitable, you should avoid taking opposite trade, which means that if the market is in the high time frame, if the market is going up in the high time frame, the market is going up, you should avoid taking trades to the downside. Instead, you should focus on upward trade, right? So here, this particular move, right, from this particular low to this particular high, this is that high, right? This is the high, this is the low. From this particular low, we have the market structure break, the market coming back, testing, and went going up, coming back again, going up, coming back again, going up. This is how the market works. Market doesn't move in the straight line. Instead, it go in a zigzag formation, which creates impulse move, pullbacks, and impulse move. So when that happens, you go to the lower time frame, understand break of structure, understand the market structure, and you execute your trades. So like I told, you can use your high time frame to establish daily bias, and then you can go to the lower time frame to execute your trades based on the daily bias. You can use the 4 hour or the 1 hour or the high time frame in order to understand what is the market trying to tell you, and go to the lower time frame, find that refined entry, and execute your trades. And I hope you will do that, and you will be able to make a profit out of it. Thank you so much for watching this video, and shared multiple videos about live trading, everything. You can watch that videos, and also you can do it. What you can do is take that knowledge, and if you need more information from me, you can comment down below. Thank you so much for your time.